Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. It sort of increasingly looks like now there's just sort of one really hurdle left for the US market to get over before the Fed look to increase interest rates. That's going to be the unemployment report in early December. Providing that number's okay and still sort of pointing towards job growth, then most people expect the Fed to increase rates by a quarter point at their December meeting. As discussed here before, it's going to be a gradual process. It's not going to be a real knee-jerk reaction. It's going to be very slow, sort of a quarter point initial move, and you maybe even have to wait maybe sort of 3, 4, 5, 6 months before you see the next move. But it will be a very gradual process. It's still sort of quite interesting looking at sort of global growth. A lot is made of the Chinese number, which is sort of falling and is now just below that sort of 7%. But if you look globally, Australia is predicted to grow at around 2.75. New Zealand's growing at about 2.1. The US is growing at about 3%. So still, although certainly China is falling on its GDP growth, the numbers are still pretty strong compared with global numbers. So you really do have to put those numbers into context, and that doesn't even include India, which is still starting to just gain a little bit of traction now, a little bit of momentum going forward, and it'll just be very interesting now to see how this sort of pans out in sort of 2016, especially if the US do look to increase interest rates, and just see the impact on markets. Just one point, it's interesting on the sort of Chinese growth number. Yes, certainly it is falling a little bit, but it was interesting to see Apple's results, and they're still getting pretty good traction in China, and still selling quite a few iPhones out there. So if the consumer is slowing down, then they don't appear to be slowing down on the sort of Apple's products, which again is maybe a clearer indication of the way the sort of economy is moving. There still is a reasonable amount of spending going forward. So equity markets sort of holding a reasonable bid. Commodities still under a little bit of pressure out there. Oil is sort of edging down towards that sort of $40, and it's just going to be interesting to see how that sort of pans out as we sort of head into the sort of crux of the northern hemisphere winter. Here in New Zealand, a few sort of fixed interest bonds sort of coming up for maturity, and it's just interesting now to see how they're sort of rolling off. They're rolling off with rates sort of north of 7%, and the new issues that are coming through are sort of quite a few of them are sort of south of 5%. Maybe a few are just a little bit above that sort of 5%. But say that it's quite a difference there between sort of above 7% and just below 5%. That has pretty major implications for the income component. But as discussed here before, there are sort of plenty of options out there in terms of high dividend shares, etc. And if you're interested in those, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.